Big tech had a huge run in 2023. Investors are wondering if it will continue into the new year. Joining us now is Gene Munster, Deepwater Asset Management Managing Partner, to offer a few thoughts on that. Gene, good to see you. I guess we have to separate out what we're talking about when we describe tech. You have the Magnificent Seven, these anointed companies. They were up a lot. There was AI working, but also they were defensive and they were considered to be very insulated from a lot of the macro shocks. Then you have the rest of tech. Speculative tech peaked almost 3 years ago, early 2021. So what looks interesting to you going into 2024?
Mike, maybe just for starters, is I think we're entering a 3 to 5 year tech bull market. This is powered by AI. This is not about interest rates. This is about a fundamental shift in productivity. And I think we are going to be in the first year of what will be a tech bubble that is going to build over the next 3 to 5 years. It's the only logical outcome when there's a seismic shift like AI is to produce a bubble. And so with all the pros and all the cons, and so that's our setup, that's our framework going into this year. And I think when it comes to performance, the consensus is that the Mag 7 is not going to perform, not going to be leading the market, just given the strength that it had in 23. I agree with that consensus. I think that the substance of the performance is really going to come with that sub $20 billion market cap. And the reason I talked about this seismic shift in AI that's going to be starting to brew, these smaller companies are going to have an impact on that. And prediction that we have at Deepwater is that the Russell 2000 growth is going to outperform the S&P 500 this year. And so we feel great about that. And we have a product that addresses that too with our Deepwater Frontier Tech Innovator Index. And so we're all over this and think that this is going to be a great setup to what is a 3 to 5 year tech bull run.
So presumably we got the first year, the 3 to 5 year bull run in the books. If you think it's an AI animated bubble, at least becoming that down the road, it seems like the market's craving different ways to gain leverage to that trend. I mean, NVIDIA doing what it does, you know, the earnings estimates are going through the roof. It's added $800 billion to market cap last year alone. Where else are you going to be able to latch on to whatever AI is going to bring the economy?
So I think this dumbbell approach is the right approach. I think you do need still some exposure to these mega caps. I'd put it in the order of Google at the top with Gemini. I think that it's going to get more respect from investors, its impact on Google's positive impact on their search business. Separately, second, I think Apple's going to announce a foundation model in June. This is going to be the first time they're going to be talking some substance around generative AI, and I think that that will be positive. And so that's kind of at the top of the barbell. And then at the bottom of that barbell, I think a couple companies. One is Unity. This is a $20 billion market cap. This company ultimately is building a lot of games today, but it's going to be building spatial environments in the future, using artificial intelligence, of course. And Etsy, kind of this forgotten e-commerce company, ultimately they can use AI to help build more creative products, and I think that's going to be a benefit. That's a $10 billion. So we kind of think of it, that barbell approach. One of the couple of the Mag 7 also have the substance in that sub $20 billion market cap.
You know, one thing I've always wondered when you talk about the estimates of all the incremental revenue streams, that whether it's going to be, you know, Alphabet or NVIDIA or Microsoft are going to derive from this trend, where's it coming out of? I mean, are there whole companies or subsectors that are going to be net losers in this environment?
Well, I think that there is going to be some industries. I think all of us have potential risk on the information worker side. If you're not embracing these tools, I think that there are going to be some net losers. As far as specific companies that are net losers, I think this is a very similar dynamic as what happened with the shift from to mobile. If you weren't a mobile-first company, who are those specific companies? I don't have a list of who the obvious ones who are going to be net losers in this. I think one company that, when I think about big companies, massive market caps that are going to be underperforming the next couple of years, it's Netflix. They really don't have an opportunity. It's not as much about an AI opportunity there, and I think the content play is played itself out. And so I would say that it's obviously been dropped. One of the focus companies in 2023. We don't talk about the FANG anymore with Netflix in it, but that's one of the larger companies that we're staying clear of at this point.
And real quick, I know you're kind of a long-term believer in Tesla and what it's going to mean even beyond cars. But, you know, the stock had a big 2023, but it's sideways for 3 years. You know, you're going to have a step down in delivery growth. What do you see the setup being right there?
Big day today. We'll get the delivery numbers. The bogey's 475. That gets you to 1.8 million for the year. I think it's above that number. Most importantly is this. Traditional auto has stepped back in terms of what they're investing in EVs and autonomy. That's a mistake. And while the first 6 months of the year is going to be challenging for Tesla, I think they're going to have accelerating growth in 2025. And I think they're going to show the wisdom of continuing to embrace this future. And I think that they're going to be massive automotive companies that have been around for 100 years. They're going to be a fraction of their size in 5-10 years from now. We'll start to see that dynamic play itself out beginning in 2025. The market will begin to anticipate it in this year.